Hello everyone, welcome to our channel. Investing is a great way to build wealth and secure your financial future. However, many people think they need a lot of money to start investing, which is not true. In this video, we will discuss how you can start investing with just $100. When it comes to investing, there are a few key benefits that make it a popular choice among those looking to build wealth and secure their financial future. Some of these benefits include potential for higher returns. One of the primary reasons people invest is to earn a return on their money that is higher than what they could earn by simply saving it in a bank account. While there is always some level of risk involved with investing, many people find that the potential for higher returns is worth it. Diversification. Another advantage of investing is that it allows you to diversify your portfolio. By spreading your money across different types of investments, such as stocks, bonds, and real estate, you can reduce your overall risk and potentially increase your returns. Compound interest. When you invest, your money has the potential to earn compound interest, which means that you earn interest not only on your initial investment, but also on any interest that your investment earns over time. This can help your money grow more quickly than if you simply saved it in a bank account. Of course, it's important to remember that investing always involves some degree of risk, and it's important to do your research and make informed decisions before putting your money into any investment. However, those who are willing to take on the risks involved, investing can be a powerful tool for building wealth and securing their financial future. Focus point number 1, choose the right investment vehicle. There are several investment options available for people with a small budget, such as stocks, mutual funds, and exchange-traded funds, ETFs. ETFs are a good option for beginners as they offer diversification and low fees. Another option is micro-investing platforms, such as Acorns and Stash, which allows you to invest small amounts of money automatically. Investing can seem daunting, especially for those who are just starting out or have a small budget. However, with the right information, it can be a great way to build wealth over time. Here are some additional points to consider. When it comes to stocks, it's important to do your research and diversify your portfolio. Consider investing in a mix of large and small companies across different industries to spread your risk. Mutual funds are pools of money from many investors that are managed by professionals. They can be a good option for those who don't have the time or expertise to manage their own portfolio. If you're interested in ETFs, keep in mind that they trade like stocks, but provide the diversification of a mutual fund. They can be a good choice for those who want to invest in a range of assets without having to pick individual stocks. Micro-investing platforms can be a great way to get started with investing, especially if you don't have a lot of money to invest up front. These platforms automatically invest small amounts of money for you, making it easy to build up your portfolio over time. When choosing an investment option, consider factors such as fees, performance, and risk. It's also important to have a long-term investment strategy and stick to it, rather than trying to make short-term gains. Focus point number 2, set goals and invest regularly. Before starting to invest, you should set your financial goals and decide on a timeline. Investing regularly, even if it's a small amount, is the key to building wealth over time. For example, if you invest $100 every month for 30 years with an average return of 7%, you can accumulate over $100,000. Investing can seem intimidating, but having a solid plan in place can help ease any fears or concerns. One important factor to consider when setting financial goals is your risk tolerance. It's important to be honest with yourself about how much risk you're comfortable taking on. Additionally, diversification is key to successful investing. This means spreading your investments across different asset classes such as stocks, bonds, and real estate. By diversifying, you can help reduce your overall risk and potentially increase your returns. Another important aspect to keep in mind is the power of compound interest. By reinvesting your earnings, you can potentially earn even more in the long run. And remember, investing is a marathon, not a sprint. Consistency is key, so even if you can only invest a small amount each month, it can still make a big difference over time. If you're new to investing, consider seeking the guidance of a financial advisor who can help you create a personalized plan that aligns with your goals and risk tolerance. Focus point number 3, do your research and diversify. It's important to do your research before investing in any company or fund. Look for companies with a strong financial position and a good track record. Diversify your portfolio by investing in different sectors and asset classes to reduce risks. Building a diverse investment portfolio is an essential step to managing risk and ensuring long-term success. Here are some additional tips to consider as you research potential investments. Don't let short-term market fluctuations drive your investment decisions. Instead, focus on a company's long-term potential and its ability to weather economic downturns. Consider investing in index funds or exchange-traded funds, ETFs, which provide exposure to a broad range of stocks or bonds and can help minimize risk. Keep an eye on fees associated with investing, as high fees can eat into your returns over time. Look for low-cost options, such as no-load mutual funds or ETFs with low expense ratios. Consider working with a financial advisor who can help you create a personalized investment strategy based on your goals and risk tolerance. Remember, investing always carries some degree of risk. By doing your research and building a diversified portfolio, you can help mitigate that risk and increase your chances of success. In conclusion, we can say, investing $100 is possible, and it's a great way to start building your wealth. By choosing the right investment vehicle, setting goals, and investing regularly, doing your research, and diversifying your portfolio, you can achieve your financial goals over time. If you're new to investing, starting off with $100 can feel daunting. However, taking the first step toward financial independence is crucial, and it's never too late to begin. Here are some additional tips to help you on your investment journey. Consider using a robo-advisor to help you choose the right investment vehicle based on your goals and risk tolerance. Don't be afraid to ask questions and seek advice from professionals or experienced investors. Stay up to date on market trends and news to make informed investment decisions. Start small and gradually increase your investments over time as you become more comfortable and confident. Remember to stay patient and disciplined. Investing is a long-term game, and it's important to stick to your strategy even during market fluctuations. By following these tips and staying committed to your financial goals, you can turn your $100 investment into a valuable asset in your portfolio. That's it for today's video. We hope you found it informative and thought-provoking. If you have any feedback or questions, please leave them in the comments below. Don't forget to like, share, and subscribe to our channel for more content like this. Thank you for watching, and see you in the next one.